Good evening and welcome everybody. So welcome to another update on that C word, which is probably doing your head in. My name is Mahmood. I'm going to be talking to you tonight about the wonderful C word, more particularly about the financial support that's out there. And as time's gone on, we're getting more detail coming in. So tonight's pretty much a practical. What do we know? What have we learned since last time I spoke to everybody? What's the procedure and what do we need to do to make sure we get our hands on that much needed money and support? And also, more importantly, what do we need to do to make sure that HMRC don't claw it back from us once we've made the claim itself? So a bit of a housekeeping. In terms of, as you can see in front of you, we've got myself. Hello, everybody. We've got contact details if you need at the bottom. We've got people coming in. Joe, good evening to you. Joe, a good friend of mine here, which I'll be talking to you about later on after this broadcast. So just to recap, we're looking at three main themes tonight. One is on that thing about furloughing. What is it actually all about? Less of an academic conversation, more about what do we need to do to make sure we don't fall foul. Most of you kept up with the conversation, managed to get through the blogs and the updates that we've been giving and the videos, etc. Should pretty much know what it is. We're now getting more detail. We need to tighten the screw up slightly to make sure once those claims go in, that HMRC won't claw them back. We're also going to be looking at the self-employed grants. I've got some numbers for you, so it wouldn't be anything in terms of this presentation unless we had some illustrations. And we're also going to be talking about the grants that come in two forms. One that's available to all businesses, ? And one that's particularly available to the self-employed itself. Again, what I'm more concerned with is less of a theoretical overview, but more practical Q&As. On the housekeeping, you can see my ugly mug on the screen. If you want comments to chuck in, say hello, please put them in there. What I'll do, I'll go through each section. When we get to the end of each section, I'll put the comments on the screen if everybody's happy with that, and we'll progress through. Bit of a sound check before we proceed. Ketner and Joe, welcome and good evening to you. Hope your day's gone well. Do you want to just do the customary thumbs up, raspberry, happy smile, or whatever, just to know that the sound is transmitting through broadcasting space? I'll give that a few minutes to come up on here. And what I'll do, let's click in to our first banner. As the time goes on, Kathy, good evening to you. I'm going to share some of your experiences with our audience tonight. So just really a hello to everybody. For those of you who are coming later, don't worry, this is all being recorded. So for those of you who tune in later on, it's all replayed. It's all going to be listening there. And tonight, as I said, we're going to be talking about financial support, pretty much focusing on businesses and self-employed. It's a strange thing, by the way. For me, they're one of the same. But HMRC draw a distinction between a business, which for me is anything, i.e. corporates, and self-employed. For some reason, they've got a subdivision. If you're in business, though, you're either going to be sole trader, self-employed, or a company. But, you know, they're all businesses. So let us kick off. Now, what I've tried to do here, so we don't get bogged down in detail, a lot of the information I'm going to share with you tonight, questions and answers will be obviously broadcast available for you afterwards. There's some blogs, some resources, some extra bits to do at the end. And at the end of this show, if you can call it that, I'm going to talk to you about a follow-on. And we've been asked to just do this on a more regular basis. So I've got an announcement to make up that at the end. What I've also got, not death by PowerPoint here, is just prepared some visuals that we can look at that summarise the main key points. We can see our Dickie Davis ticker tape at the bottom. That's what's going to summarise what we're going to be dealing with in, first of all. Now, by the power of magic, I'm just going to share my screen. I haven't disappeared completely, everybody. And what we've got on here. So what I've got is me in the left-hand side of the screen saying hello to myself. As the slides, these will be made available. They're on this screen there as well. I'm just going to say, interject at this point at the moment. There is somebody who's just come to join us, who's been a stalwart. So apart from myself and my team keeping the office going, they've all volunteered. They're all playing it safe. Serena, some of you will know, has come to join us. She's a stalwart keeping the ship going with me and everybody else. So hello. She doesn't really do social media, so she's decided to slum it tonight and probably making observations about things I can do better. So effectively, let's remind ourselves about some of the key bits. Now, these guidance notes, by the way, has specifically been obviously put in by HMRC. These aren't, it would be nice to have. Yeah, no problem, Katna. So I'll go for each one. Now, I put a slide visual on the screen, everybody. So I'm going to explain each of the components in there. If you can tell me if you can just about see them, if the visuals are coming up on there. So let's remind ourselves some of these key conditions here that need to be in line. Number one, you've got to have a valid payroll scheme going, i.e. it's registered as at February 20, the end of February 2020. Now, let HMRC say the 28th of February. Obviously, we've had a leap year. So for argument's sake, I don't see that many people are going to be registered on the 29th, but there's got to be a valid payroll scheme with a reference number, etc., as at the 28th of February 2020. If you haven't got one, then there's no point listening to the rest of this slide. You're not going to get a claim made. Secondly, you've got to have something called PAYE online. Now, if, for example, you've got ourselves or somebody else running your payroll, there should be something behind the scenes called Employers Online or PAYE Online. You've got to be registered for that. Otherwise, you won't get the claim process. Probably something obvious, you've got to have a UK bank account. There are some people I've come across that operate their businesses and their bank account is not a UK one. And by UK, we're predominantly thinking about England. So if you've got a bank account that you use that's overseas, again, unfortunately, they won't be able to pay the money to you. Once you tick those key boxes with other conditions, then you'll get a grant that will be winging its way to you. Now, just remember, the grant fundamentally is a reimbursement of what you're paying out. I'm going to reinforce that in a moment and look at some numbers later on. So that's the first section. I'm just going to pause for a few seconds. Can I just ask everyone, obviously I'm going to comment on each component of the chart. Is the chart sort of visible to you? Can you actually read what's on the screen? I'm waiting for that. Let's... Okay. Time lag here. My head's going back and forth like a Dalek, so let's have a look at the next slide. Let's come forward. Perfect. So let's have a look at now of the eligibility here. And again, the key thing is we've got to tick the boxes. I've introduced items here that apply to some of you and not all of you. So I'm trying to give an overview here. So to be eligible, you've got to have your worker, your employee, with you on the payroll as at the 28th of February 2020. Doesn't mean you have to pay them because they could be on a 0 hours contract, but actually they still are on your book, so to speak, as at 28th of February 2020. Now, 2 or 3 things to bear in mind here. If you have a new starter that starts with your organization, whether it's a sole trader or a company, remember any of those businesses can be employers. If you've got somebody you've taken on as an employee, after the end of February 2020, then you will not be able to claim a grant for them. You can still pay them by all means, but you won't be able to get any of their monies reimbursed. If you've got somebody on your books as at the end of that month, then they are potentially within the remit of being able to be claimed for. Now, there's a couple of variations on this. So if you've made somebody redundant that's been with you prior to the 28th of February, or you've dismissed them, and then you subsequently re-employ them after the 28th of February, you can still furlough those members. And furloughing, remember, is this idea of what I call employee hibernation. Now, it also applies to apprentices. So if in your organisation you have an apprentice, apprentices can also be furloughed. I'm going to call it the F word, by the way, because new teeth here, I can't quite say the word correctly. So apprentices can also be subject to a furloughing claim. We're going to talk about the training separately later on, and also those who are on what are called fixed term contracts. So if you've got somebody that you've got a fixed defined term that you're taking them on for, they can also be within the remits of being eligible to be furloughed. And lastly, directors. Okay, that's been a big debate in the early stages, in the early period of March. But so if you've got a company and you are a director, whether it's 1, 2, or however many directors, directors are also within the definition of eligibility as well. So effectively, pretty much everybody is fair game. So that's the eligible employees. So directors, those on fixed term contracts, apprentices, anybody who's registered with you, 0 hours contract, all of them are okay. So what that means is anybody that you use to help run your business, that's self-employed, that's their status, forget it, they're not going to be eligible under this scheme, and they go for a different scheme in themselves. Now let's get to the nitty gritty. And again, remember, these aren't, it would be nice, these are absolutely critical conditions. Ketna, I'm just going to address that in a moment. So let me just pause there for a second. I'm just going to share Ketna's comment. Should the pay slip reflect the 80% if that's all I'm paying? Now, when we come to look at that later on, when I work through some numbers, when you've worked out the 80%, my advice would be is to actually have that stated on the pay slip itself. It's not critical, it's not a legal requirement, but somewhere you've got to keep a record of what's being paid out as the furloughed reimbursement, and all the references, by the way, are to the gross pay, not the normal pay. Again, I'll pick this point up in a second or two when we look at some numbers. Let's just take the question down. Perfect. So here's the conditions. The minimum period of time that the F word can be applied for somebody in your business is 3 weeks. So if they're off for 2 weeks and come back, then you will not be able to claim any reimbursement of any of the wages paid out to them. Minimum period is 3 weeks, and the claim cycle, by the way, is also every 3 weeks. The second thing, and it's really critical that we understand this, is what's called the work condition. Now, I said at the beginning of this slide that to F somebody is effectively employee hibernation, which means they cannot work for your company. And that means even if you're a director of your company. So if they provide services for your company or your business, if they effectively perform functions, then they are not furloughed. So if you just reduce their hours to say, money's tight, you can do 1 day a week, you cannot claim anything back. It's got to be an absolute no-no, no work is being carried out. They can volunteer as long as they're not generating income or providing services for your organisation. They can go and work elsewhere. So I do know of situations where employees that have been furloughed, they get part-time jobs elsewhere. That's perfectly fine. That's perfectly acceptable. It's the work they're providing for you that's a no-no. Now, when it comes to directors, by the way, we've had this term that I mentioned last time called statutory duties. And effectively, you as a director owe a responsibility to your company. So if you're a limited company, you owe a responsibility. So you can do things like bookkeeping, admin, filing the accounts. That's all fine. That will not invalidate your claim. I've seen a lot of conversations on the internet and elsewhere about saying this is a great opportunity now for people to upskill themselves. So your employees, i.e. yourselves included, can go off and actually acquire lots of different skills for that time when life gets back to some degree of normality. And that's nothing wrong with that. However, there's always a however when it comes to tax, finances and numbers. And that means that if they are required to do that work and they're undertaking that training, that's fine. Be aware though that if the number of hours they're working on doing this training exceeds a certain limit, then you may have to pay them at least the national minimum wage. If you're a grown-up over 25, that minimum wage is £8.72. In context, if somebody is having the F word applied to them, then the wages that you're paying them should cover the hours they're spending on training. There is a possibility, depending on what the course is, what the mode of study is though, the number of hours they might be working, and training, by the way, is counted as working. If it goes over a certain number of hours, then potentially you have minimum wage payments to make to them. And again, you know, just bear that in, factor that in. Now, formality and records. I think this is on 2 grounds. Number one, if you employ staff, make sure you've got the letters that you've sent out to them. Make sure you kept a copy of their responses, keep those on file. My instinct says, by the way, that HMRC will be doing some inspections, some checks. They'll either sample risk them, they'll do it on what's called a size of company, but there's a likelihood, certainly based on the press that I've been reading, that HMRC will actually investigate after the claims have been made. So just make sure you've got that on file. Now, the other side of the coin is if you are a director of your company, it happens quite often here. Remember, your company is a separate legal individual. You as the director is separate to your company. So if you are yourself going to be furloughed, then you must make sure that's noted in your board records. Make sure there's something documented. So director minutes saying, we as the company have made a decision that you are going to be furloughed. Make sure it's kept on file. Again, HMRC has specifically said they expect those board records to be updated and kept. So again, if you need to do those, if you're in that situation, make sure they're done. Obviously, anyone who we look after, we will be updating you, telling you what needs to happen, making sure those records are done. But again, they still need to be done. Okay, let's get to the end here. I've just got a question from Ketna. Will talking, displaying my historical product services on social media be working and invalidate my works claim? If I was to be a purist on that one, I would say yes, it is. Because that is you still working on behalf of the company, your company, and trying to generate income for that. So therefore, in your capacity as an employed director, my view would be that would invalidate your claim. That is not statutory duties, and therefore you run a risk of that claim being invalidated. There are potential workarounds, but in your capacity as a company director, if you're going out, doing your social media, doing the activity to promote your company, to get more business in there, to maintain that presence, that is still working in my definition. That is not statutory duties. So again, it's effectively hibernation. Again, follow on comment. If you don't mind me sharing this, Katna, educational content, I would still see that as working. And the way I would draw the distinction, and I'm not trying to be a party pooper here, I'm not working on behalf of HMRC, is that if you are doing things like advertising, promotion, generating educational content, that is not a statutory duty of a director. That is what you would be doing in your capacity as an employee, brackets part of your duties with a different hat on. Statutory duties are things like keeping the accounts, effectively providing services internally, not externally. So again, my view would be whatever social media content you're generating, whatever interactions you are doing here, I would probably say that would be working. If you're engaged in a social media course, or you're learning how to, I'm not saying it's going to be TikTok, if you're learning how to use Twitter, if you're learning how to upskill yourself, that is probably a different situation. But if you're doing it on behalf of your own company, then that's where the grey area comes in. Does that answer your question there, Katna? I'll leave that with you. You can tell me if it does or it doesn't. I'll wait for that response to come in. Let's move on. Now, obviously what we're all interested in is, what does that translate into money? Fundamentally, and I've got an illustration to go through with you in a minute or two, is first of all, you can effectively, so first of all, you take a figure that represents the salary. Typically at the end of February 20, there are 3 or 4 variations. 80% of that salary that you're paying, shall we say normally, is what is subject to the reimbursement claim. And that's the figure that with discussion with your employee, you're allowed to go down to and actually pay them and get that money reimbursed. You will also be able to get the reimbursement of national insurance and pension contributions as well. If somebody starts with you partway during February 20, technically speaking, strictly speaking, that's what the rules are, and we wouldn't do anything else, then you pro-rata what that money is. The claim, by the way, that from the first date you can claim is the day somebody stops working for your company. So if it's you, the day you stop work is the date the claim starts from. If you've been furloughed from the 1st of March, but the paperwork hasn't yet been completed, you're still in that conversation, but you're not doing any work, the claim can start and be backdated from the 1st of March. So it's not when the paperwork gets done, it's not when the letters get sent out, which sounds quite odd, but it's on the day that somebody stops working. That is the day the claim begins. At this moment in time, the claims are only running for 3 months, by the way, from the 1st of March up to and including the end of May. We don't know yet what's going to happen after May. Normality might be creeping back in. If the situation doesn't alter, this is purely educational guess, no fact. It may start again from the end of May. But at the moment, it's only a 3-month window between the 1st of March and the end of May. And the claims will be commenced online. Typically, what we do know about the claims, HMRC, and the way I would say it's done is like self-assessment. HMRC, once their portal is built, once their compliance systems are plugged in, what they will do, they will then ask employers to make the claim. And typically they will say, what's the amount of money you're claiming back for? What's the national insurance numbers of each member of staff? What date does it run from? How much are you claiming? Bank details, etc., etc. There will be some compliance checks like verifying that you are who you are. Once that's done, you'll press the button and then give it a time to chug its way through the system. Money will be then paid over to you. And that's the procedure that you're going to run through. Again, they do reserve the right to audit that, to come back to you. So just like your personal tax returns, you fill them in or get us to do that or get somebody else to do them. We submit them and then, HMRC reserve the right to come back and say, we'd like to check out what's going on. Now, before we proceed on to the next bit, I'm just going to share another comment here. I'm running away myself. Let's get here. Right, now what I've got here, if Kevin doesn't mind me sharing it, there's a question here, social media. Now, it's a great question. So if you are the person who's doing your own social media, you're the person who does all your advertising and promotion, then it's an idea to say, actually, I'll engage somebody on a short-term contract. That's fine. You can pay them because they're carrying out the work for you. The only thing I would suggest that you might want to think in terms of is, what are you going to do to check the quality of their work? So one thing I would suggest that you might wish to do is to give somebody a particular contract, let them get on with it, and they report back to you, say after 3 weeks, if you're comfortable with that. That wouldn't be a working situation. But the work dimension for me is not the actual doing the social media stuff, but for you actually monitoring them and keeping an eye on them there as well. So in theory, get somebody else to do the work for you. You've got to take a break. You can't actually do that, or you might just want to outsource the whole activity. Again, what that means is I would suggest 2 things. If you are going to outsource the work, do your due diligence. I know that's not really part of this conversation tonight. What I would also say, though, is remember self-employed people that we're going to talk about later on can carry on working and still get a self-employed grant. Now, that doesn't mean you should drive down rates. You should take advantage of the situation. But I think, as I've seen other people doing, that might be part of your negotiation. As long as they can do the work, they're competent, they carry out and deliver what you want, that might be part of your conversation with them, is to say, look, there's an opportunity for you here. Can we have a discussion, make sure you can deliver the work, and can we have a discussion perhaps about the rates they're going to charge? I'm not going to get involved in that conversation. All I'm just saying, yes, you can outsource it. That doesn't count as you working, but you still have to keep an eye on it. And again, everybody else, as I'm coming in with these questions, if they're not addressing and answering directly, then obviously please say so accordingly. So I'm going to, now I know my wife is watching, by the way. Serena, hello to you. I'm going to take a sip of water. As you know, Serena works very hard. She's not on furlough, by the way. And what we're going to have a look at now, let's go back to the banners. Here's our next thing. Now, this is where it gets a little bit interesting. Again, we've dealt with this quite a lot for people. So this is the salary. What can you pay somebody and get the full reimbursement? And there are 2 variations on this, one way. Number one, if somebody who's part-time or otherwise who actually gets a fixed rate of pay. And the pay, by the way, is reference to what's called regular salary, brackets contracted salary. It can include overtime if that's the normal part of the salary process, but it's what's paid out in gross terms, not what they take home after deductions for national insurance, for pensions, and any other deductions. It's the gross amount before any stoppages are made. If they're on the same amount of money up to the end of February 2020, whether they're part-time or full-time, that's the reference point for working out your 80% claim. You may be in a situation, which a lot of people are, that employee of yours, and it could be yourself as well, by the way, actually gets what's called variable pay. So in other words, during the period up to February 20, you're not getting paid the same gross amount. And if that individual or yourself is not getting paid the same gross amount, is what's called a variable calculation. Crudely, and I've got some illustrations, the two main bases are working out an average monthly figure, or if the criteria fits, you look at the situation as at February 2019. So let's just recap on that. The reference point for working out the 80% starts with what the pay was as at February 20. If they get the same amount every month up to that month, that's the figure that you use. If it fluctuates, you've got to go to what's called a variable calculation. Now, I know the anticipation is building up. And what I've got for you here, here's one I prepared earlier in good old Blue Peter style. So this is the situation, by the way, where you have an employee, which could include yourself, where the pay has been fluctuating, brackets variable, in the period up to February 2020. Now, there are four initially key numbers to think about. Now, the figure earnings is basically just a posh way of saying what's the gross salary, what's the gross regular salary, up to February 20. Anything that's paid after that, by the way, doesn't count in this first calculation. We then, the first scenario is, has that individual, obviously yourself included, been employed by you for at least 12 months? If they've been employed by you for at least 12 months up to February 20, so i.e. effectively we're talking what we're talking about, March 19 up to February 20, then this is what happens. Now here's some numbers that I prepared, if they come on the screen. Now again, this will be made available afterwards. For those of you who will look after, as we've already said, we will do the number crunching for you. That's obviously what our forte is. So don't worry too much about that. We've been in conversations with pretty much, I think, every single client, and even those we don't look after for payroll, to talk them through the numbers there as well. So let's assume somebody in the year 1920, so that's from effectively April 2019 up to and including February 20, the total gross salary is 2625, and that's the made up of some months have not been the same. There are 11 months in that year, so the average figure for that year is 1,875. The claim is then 80% of that figure. So therefore, the amount that you can negotiate and pay your employee is £1,500. Anything below that is not able to be reimbursed, and technically speaking, you've invalidated the rules as far as we know them. So they've got to be paid at least £1,500. You can pay them more, but you're only going to get funding for £1,500. The gap between those two, you've either negotiated down with the employee, or you decide to fund that gap yourself. So that's option one. Option within that situation where somebody is employed for more than 12 months is you can look at what the salary was as at February 2019. And the government say it's your choice which figure you take as the start point. You choose the higher of those two numbers. One more thing to mention here, by the way, and there's been some confusion about this, there is what's called a cap. So in other words, when you work out the average pay or the fixed pay as at February 20, and you apply the 80%, If that number is more than 2.5 grand, then you must always take 2.5 grand. 2.5 grand is the maximum amount per employee per month that you can claim back. So if you've got typically somebody who's on a high wage, what will happen is by the time you go through the calculations, then you'll find that exceeds the 2,500 limit. 2,500 is the maximum you'll claim back. Now, the reason I mention that specifically, I don't think anyone here in my group, it'd be great if you were, are professional football players. If you were, there's been a lot of, I would suggest, misunderstanding about Premiership football players. I know this doesn't really apply to us. The average wage of a Premiership football player is about, so I saw this morning, about 300 grand a week. What that means is, if they apply for furloughing for their football players, they will only get 2.5 grand contribution from the government. That's about 1% of the wage bill. So, put it in context. Remember, 2.5 is the maximum you can claim, and that's the basis there. Now, if somebody's been employed for less than 12 months, there's no choice. You just have to take an average monthly figure for that year. So up to February 20, somebody's been employed, let's say, for 8 months of the year, tot up their gross salary, divided by 8, that gives you an average pay per month of $1,750. $1,400 is what you can negotiate and agree with the employee. That's the amount that you're going to get reimbursed. You can pay more than $1,400, that's fine, but you won't be funded that excess. So again, it's a question for you to decide, can my cash flow afford it? Does my employee going to take a bit of a haircut with me? But remember, technically speaking, the employee can turn around and say, on your bike, I'm not taking any cut in my salary. You do have the option of making them redundant. But again, that's a commercial decision you need to make. It's not an HMRC decision. But you're only going to get $1,400. Fund them below and all bets are off. And again, everything goes manic, by the way. I would probably say HMRC has said around about the end of April, but we've got until then to get all our ducks in a row, to get all the numbers done, to get all the letters done, confirmations, keep the records, and then wait until the portal goes live. And if it's anything like the rates situation, it's all going to crash anyway. But, it's there. Let's crack on with that. Okay, right. I've got a little bit more to go through in terms of self-employment. Do we have any questions? We know where the comments box is even. If not, I'll give them a second or two and we will proceed. I'm just going to do my sip of water. So, Mrs. Reza, if you can listen, if you're listening in, obviously you can give me your feedback either when I get back home, and you can give it a thumbs up to say I'm drinking the water that I should be doing. Okay, let's have a look. Okay, right, so here's what I want to talk about next. And we're talking about self-employed. And I'm going to talk about two aspects here. I'm going to talk about there's two levels of grants out there at the moment. One is geared towards self-employed individuals, brackets partners, and one is a grant that is linked to whether you run your business from a property. Okay, so there's two separate grants here. One is cash if you're self-employed, and the other grant is whatever your structure is, whether you're a sole trader or a company, there is a grant available if you run your business from a property. If you don't run it from home and you've got some premise outside of your house, then you are potentially eligible for this grant. Now, the boring bits here, which is really critical, it's about the conditions. In both situations, by the way, for the F word and for self-employment grants and rates grants here, well, maybe less so for the rates grant, is critical. HMRC are very specific about this. It's where things have suffered as a result of the COVID-19 situation. So if your business has been unaffected, which is extremely unlikely, then the grants and the support are not available to you. You've got to have suffered some impact because of COVID-19. Now, what this means is I know it's quite obvious to all of us. I would personally speaking, because I'm a belt and braces guy, is if you know your business has suffered, like people who have cancelled contracts, you can't go out to work, all that, document it now while it's relatively fresh, keep it on file, put it away somewhere, job done. But again, technically speaking, HMRC could come down and say, we don't think your business has suffered. And then you've got all the hoops to jump through to go back and recreate some form of audit trail. Have it all stacked up. Now, first of all, the conditions, your status. So if you are a company director, you might call yourself self-employed, and it's quite a natural thing to call yourself that, but the computer says, no, you will not be eligible for the self-employed grant. It's basically, are you a sole trader, brackets freelancer, brackets an individual? Doesn't matter what you call your business, but are you an individual? Are you a partner in a business? So if you're a partnership, then what happens at the end of each year? The partnership does a set of accounts and a tax return, and it divvies up the profits for each individual partner. For me, the key test is, do you complete a tax return, or somebody complete that for you, where there's a section in there that says either self-employment or partnership pages? If the answer is yes, I would say pretty much you're in the situation to claim. Number two, have you completed a 2018-19 tax return? If the answer is yes, thumbs up. If you're a new starter, so you started your business after the 5th of April 2019, you're not going to get a penny, I'm afraid, under this heading. It seems unfair, but unfortunately, there are lots of winners and there are also lots of losers in this whole COVID-19 situation. I'm focusing more on, I wouldn't call it winners, but the people who can potentially get some support. Now, if you haven't got your act together to do your 18-19 tax return, apart from me saying naughty, naughty, you've got until the 23rd of April to get it done. If you miss that deadline, my view would be you're not going to get anything. The other thing I would also suggest, by the way, is if your return for last year was draft, a provisional one, because circumstances and such, you didn't have everything to hand, get a proper one completed and get it done by the 23rd of April 2020. And when I say get it done, I mean get it completed, get it submitted, get it filed, and get approved. We have capacity, because our office is still going, again, to actually take on extra work here. We're putting people in, but if you've got an advisor, get it sorted. If you haven't done it, get it done. If you don't get it done, you won't get anything at all. Now, here's the other thing. The key thing is also part of this is that you've got to continue to trade, intending to trade in the year 2021. So if you said, do you know what, I'm so depressed, I'm going to hang it all in, forget everything now, then if you cease trading on effectively the 5th of April 2020, you will not get anything at all. Your business has got to continue. You might not make a dramatic amount of money to begin with, because you might be recovering, but you've got to have the intention and you've got to be still trading in that period of time. What that means is, by the way, that presents a conundrum for some people who may be thinking about forming limited companies. My advice would be is to consider certainly looking at the company structure, but perhaps not ceasing self-employment completely. Again, for any specifics, we'll take that offline and discuss it, but you've got to be trading. And the last thing is the profits number that's going to exist. So again, those are all your key conditions. If you don't comply with those conditions, effectively, HMRC reserve the right to claw that money back from you. And also, if we're going to be really officious about this, it can be classified as being very, very naughty. And remember, if you're a company, it doesn't apply. Now, the profit match. There are two scenarios here. The first scenario is to say, HMRC say, look at what was happening in the year 18-19. And again, just to reinforce the points here, I've got a little illustration I've worked up, which I'll show at the end, just get a head around it. You won't have to do the number crunching, by the way. HMRC will do that on your behalf. However, there's a lot of clients, quite understandably, a lot of people want to say, for budgeting purpose, which makes me happy, for cash flow planning, which makes me happy, I want to try and estimate, roughly speaking, how much I'm going to get. So I'm going to show you what the rough calculation is. Again, we are doing this for clients, and so, it's something that's quite standard. So first of all, look at, for the year 18-19, what is your figure for taxable trading profit? So from self-employment, not what's in your accounts, but what was in the tax return, is it under 50,000? If the answer is yes, you got tick box for number one. Tick box number two, does that represent more than 50% of the overall income? Now, you might be sitting there thinking, that sounds really odd. What do you mean? Well, again, I have an illustration to show you. If you've, on your tax return, you've got profits from self-employment, and you've also got perhaps a pension income, you might have a rental property or dividends or whatever, when you add that into the mix, if the profits from your self-employment situation is not at least 50%, then you won't get anything at all. You can look at 1819. If that doesn't quite work out, HMRC said, well, you've got another option. Look at the last 3 years and do the same situation and average it out over the last 3 years. And if it's under 50K trading profits and it's more than 50% of the overall total income, thumbs up, you're eligible for that claim. Now, there are situations, I don't want to go too much off piste, is that if you've got let's say you've only been trading for 2 years, all they're ultimately trying to do at the end is to work out what the average monthly figure is. So they're going to cater for situations where you've only been trading for 6 months, you've been trading for 2.5 years. You don't need to have been trading for 3 years, but that's the 3-year maximum window they're going to look at. So if you only started in 17, 18, halfway, then they're going to take 18 months for the average. Now, the money. There is a guidance calculation, by the way, that says, and I'll show you at the end, that you look at the profits, you work out an average monthly, you multiply by 80%, you compare it to the cap, and that's the maximum grant you'll get is £2,500 a month. You might have noticed, by the way, from what I've said so far, and you'll notice more so on the illustration, this is in line with how the furlough pay calculation is done. Take a number, take 80%, compare it to £2,500. £2,500 is the maximum. The difference in this time, by the way, self-employed, I wouldn't call it necessarily, well, I suppose it is actually. If I look at it like for like, the self-employed are in a better situation in the sense the money is arrived as a one lump. The downside is you have to wait until about June 2020 to get the money. The amount of money that you can claim back under either scheme is exactly the same. You either you'll get the money as a lump sum payment, so it's not going to be paid in installments. And you're actually invited, it sounds very quaint, doesn't it? HMRC will invite you, they will do the initial assessments, they will contact you, and they will invite you to go online and complete the claim form. Typically, and I'm going to mention what I think that validation will be, things like your bank account, can you check it's your bank account, validation about who you are, national insurance numbers if you haven't provided one, so they can check it's going to the right person there as well. Now, the other thing is the rates grant, and if it's okay with everybody else, I'm going to leave the rates grant for a moment or two, by the way, because I think while it's fresh, I'd like to go to the last slide to show the numbers, and then we'll come back to talk about rates in a moment. So I'm going to skip through this slide. Now, this next slide, by the way, is how the numbers are worked out for your self-employed grant. So if you're a freelancer, sole trader, not getting your money through a company, that's not how your business is done, this is eligible to you. So here's effectively the 6 key elements that we need to build up. First of all, a figure that represents the trading profits, a figure that represents potentially any figures on your tax return, which is not from self-employment. We then got to look at a profit level, we then look at a profit mix, and then we draw a conclusion. We have done that already, by the way, for pretty much all our clients. Unfortunately, some don't qualify, some do qualify. And here's how it works. And these are numbers, again, I've just made up. So let's assume for the year 1819, and for this calculation, by the way, I've assumed a full 12-month picture. So in other words, somebody has been trading for a full 12 months during the year 1819. So i.e., they commenced their business prior to the tax year 1819. In that year, their profits as included on the tax return, and that's the figure on which they pay tax, is 18 grand. In that same year, they've also got £2,000 worth of income from other sources. And again, it could be rental property, and the profits are 2 grand. It could be a small pension, but it's 2 grand. That doesn't come from self-employment. The total income in tax terms is 20 grand. Now let's apply the 2 tests. Number one, 20,000, hopefully as we can see, is below 50. Tick box 1, we're halfway there. The second question is 20,000 is more than 50%. Sorry, 18,000, if I can do my numbers, is more than 50% of the 20 grand, i.e. it's 90%. So that means both conditions are satisfied. That person is eligible for a grant. Now let's have a look at the claim. What would that be worth if they were going to make a claim, which obviously they will be, and it goes as follows. Now again, assume, for whatever reason, just to make it simple to understand, that they've been trading, for argument's sake, for effectively just 12 months. That's all they've been trading for. So that's their first year. They've got no prior history. If they've been trading for 12 months and their profits are 18 grand, the average monthly is £1,500. 80% of that equals £1,200. And that's below the 2.5. Therefore, they can claim that as part of their claim. They claim for 3 months. So that's £3,600 that will come into their bank account on or around the end of June 2020. Let me just freeze my brain there for a second. Let's recap. 18 grand is the annual figure. 12 months of the year they've been trading. £1,500 is the average monthly. Apply the 80% rule. It's not capped because it's below 2.5 grand. 3 months worth, 3,600. And that's what they will get by way of cash paid into their bank accounts once they've completed the application, which HMRC will invite them to do. A couple of things to bear in mind. That figure is taxable, so it's part of your income. So what that means is if you're claiming universal credit and you get that money coming in, make sure you advise universal credit of a change of circumstances. Number 2, that will form part of your tax return for the year 2021, and any tax on that will be due January 2022. Now, quick calculation for me, if you like simplicity, which I do, if you look at the trading profits of 18 grand, if you just apply 20% of that, that's the grant claim. So you can either go step by step or just apply 20%. Obviously, if your profits are higher, the grant figure goes up. If your profit figures are lower, obviously the grant figure goes down. If you're making a loss, unfortunately, from everything I read, your claim will be, unfortunately, 0. No problem at all. Just as a recap, by the way, so 2 things I'm going to do. I'm going to say goodbye to my friend Joe. All of you are friends, obviously. Joe, thank you very much for that. Enjoy your call. Listen to the rest of the replay. We'll catch up sooner rather than later. So thank you very much for your involvement, Joe. No problem at all. Just as a recap, by the way, for those who are coming on replay, we've talked about the F word, and it's not swearing. It's about furloughing. Here, there's a bit of a recap of some slides at the beginning. We talk about who's eligible, what you have to do, the documentation that you actually need to make sure you've got it online. And this is not it would be nice, I'll get around to it. If you don't get it sorted, you run the risk of losing everything. We talk about how much you're going to get, when it runs to, and we now talk about the self-employed grant, how much you get, who's eligible, conditions, and all that sort of jazz. Remember, HMRC, by the way, does not give out money willy-nilly. So they're going to do their best to comply as quickly as possible. But like all these things, there are conditions attached to everything here as well. And there have been cases that I've read, by the way, where some people are being a bit naughty and they will find themselves into a bit of hot water there as well. Obviously, anyone who's part of our client family, you will be looked after extremely well and nothing untoward is going to happen. What I'm going to do, everybody, is to go back on a slide because I'm going to have a look at the last thing tonight, and that's looking at rates. So as we said, if you work at home, this is what I'm going to talk to you about does not apply to you. So if you look at the bottom of the screen, the 2 bits of the slide, in fact, let's be really crazy, use technology. So I'm talking about the rates grant. It's not actually officially called the rates grant, by the way, but the official title is too much of a mouthful. And bear in mind, my teeth aren't in properly. and I'm getting my words stripped up. I'm going to call it rates grant. So fundamentally, if you run your business from a property outside of your home, then potentially there's some money for you. And that doesn't matter what your business is in the main. It can be a limited company, it can be a charity, it can be a sole trader, it could be a partnership. The key thing is you run your business from a property. Technically speaking, I'm going to be really boring here, and unfortunately, I'm going to talk to you about conditions. Strictly speaking, is if you're on the register at the 11th of March 2020. So if you've moved into a building after the 11th of March, unfortunately, you've missed the cut-off point. Number two, my initial view would be you've got to be on the radar of your local authority. There are provisions if you're not, but generally speaking, the claims will be based fundamentally, I'm going to talk about some of the practical problems there, is you've got to be on their property database. If they don't know you're there, then you can't claim for it. You can try and rectify the records. You can say, oh, I forgot to tell you. Obviously, they want evidence and everything else, but fundamentally, the start point is, are you on the property database as at the 11th of March 2020? And remember, to a large extent, there is no exception. So it's not saying if you're a charity, you can't get it. If you're on the radar, whatever your business is, whether it's a limited by guarantee, a charity, a sole trader, a limited company, it makes no odds. It's for a business rate grant. Acronyms, don't we just love them? If you effectively don't pay any rates whatsoever, so it's neutral, zero, typically that's based on what's called rateable value up to 12,000. You can apply. If your rateable value is between 12 and 15, what that means is you don't pay the full amount of business rates, you get a reduction. It's what's called small business rates relief. If you're agricultural, you've got rural rates relief. So effectively, the government have actually been a bit more generous. And if you pay no rates or a little bit of business rates and you get small business rates relief, you can apply and you are eligible. If your business, there's an additional grant here, if your business is in what's called retail, hospitality and leisure. And that covers, by the way, a wide range of organisations. Now, if you are in that sector, and I'll explain in a moment what businesses are in that sector, then, first of all, if your rateable value of your business is up to 15k, you get the 10 grand. In addition, if your business has a rateable value between 15 and 51,000, all of you can spot, by the way, I've missed out a zero on the last slide. Obviously, when I publish it, I'm going to add the zero. I should say 51,000. But if it's between 15 and 51, you get 25k. If it's over 51,000, unfortunately, your computer says no, you won't get anything under this umbrella. Specifically, the 25 grand is for those in the retail, hospitality and leisure sector. And it covers a weird group of, when I say weird, by the way, businesses aren't weird. It covers retail, hospitality, leisure and assembly. So that includes things like clubs, associations, art galleries, if you've got artwork for sale, theatres, live music venues, drinking establishments, by the way. So that can include wine bars, pubs, village pubs, doesn't matter. It covers lots of things, employment agencies, estate agencies. Fundamentally, I'll produce a big definitive list for tomorrow, hopefully. But effectively, you run a business, it can be a charity, it can be an art gallery, a theatre, a museum, all of them a fair game, all eligible for the grant. One thing to clarify, by the way, I've seen circulating around that some charities have been denied by their local authority on the grounds they're not eligible, because charities get what's called discretionary rate relief. So there's a clue in the title. The local authority has a discretion to exempt their rates fully or up to 80%. And that's called discretionary rate relief. However, in the guidance that's been quoted to local authorities that the government has given out, I'll be really sad here, it's section 25. It says that if a charity has got discretionary rates relief, it is still eligible for this grant. So if your local authority is saying, go away, you're a charity, you're not part of this because you don't get small business rates relief, then either get them to contact me or pursue your local authority, because charities who get discretionary rate relief are still eligible to make the claim. If they're denied, I would suggest it's probably because in all the hullabaloo and local authorities move very quickly, somebody's not read the guidance notes correctly. And again, effectively, here's the numbers. If you get small business rates relief or rural rates relief or discretionary rates relief, I would suggest, then effectively 10K is on the table. It's local authority led, by the way, which means I don't know what your local authorities are like. There's some local authorities that I know of, and I'll give a couple of heads up notice. I think they're really brilliant. I'm not criticising my own in case Leicester is listening, that have got their act together. Systems are perfect. They've probably got less claims to worry about though, and the claims are going through. Other local authorities, the systems have got some problems in there. I know some people, clients of mine, that are actually within the window, and the sites are, can I swear, they're crap basically, because they're crashing. There's some basic mistakes. And again, it's not a pointing the finger exercise, by the way. It's just because of the rush, some of the validation checks haven't been done. So you've just got to be patient, everybody, I'm afraid. They did initially announce they were going to have it available during April 2020. So if you're getting it now, you've done really well, because it's, technically speaking, the 1st of April was go live day. Be patient. My own local authority, Leicester. I love Leicester. I have migrated from London, so it's my second adopted city. Well, it's my adopted city, not my second one. But Leicester, few teething problems. They'll get their act together eventually, but it's been frustrating. And the claim goes live now. Now, a great question from Kathy. I'm just going to share your question on the screen if you don't mind, Kathy. So, Kathy, great question. Do you get the full grant or part of it? The grant is not pro rata. So if you meet the eligibility conditions, i.e. you own your business from a property, it's within the criteria, which most properties will be. Typically, if it's small business rates relief or you don't pay rates because of the rateable value, the full 10K is what you get. So no pro-rating. It is taxable, but I think at this stage of the game, anyone who's worried about tax on the grant, I think is probably looking at the wrong thing. The tax is paid in the future. We need the cash right now. So, you know, effectively, a bit of tax off of 10K is better than getting nothing at all. Does that answer your question, by the way, Kathy? So you get the full 10K if you're eligible. There's no part claim. It's basically all or nothing. Okay, ladies and gentlemen, I think that's pretty much that sort of short whistle stop presentation. I've got a couple of more slides, I suppose, banners to share with you. So what I'm going to do, you're going to get the full force of my face, which could be a good thing or a bad thing. I think that was the last slide. Yeah, it was. Bang. That goes there. So I'm going to stop sharing the screen. Bang. It's back to me now. Welcome back, everybody. I will share those slides, and well, the recording's there, so the slides are on there as well. I'll obviously update the slide later on. A few other things just to follow on that you might find useful. Next steps, or what the next steps are. So I'm going to turn off the banners actually and share the next steps with you. So usual things. What I'd love if you could, won't be any show on my part. Perfect. Hayley, congratulations. So I'm just going to share that from Hayley. So we've got some good news, everyone. Charnwood have started paying out. Anyone who's actually made the claim already, what's your own respective experiences been like? So Charnwood, well done, Charnwood. I know other agents, local authorities have also got them. What I would say, though, Charnwood is a smaller metropolis compared to Leicester. So therefore, it's probably slightly easier, but, you know, still well done. And that money should be coming through. So my pleasure, Kathy. Keep the faith. I know it's been frustrating for you. It will come back online eventually. I know it's frustrating. I would certainly suggest everybody, the rates grant specifically is geared towards covering running costs. So if you are having issues, Leicester City Council has crashed. Lots of people doing it. Listen, I think I'm going to be fair to the local authority. All the local authorities, they've had literally, what has it been, 17th of March, 24, about a 3-week window. And what's happened is the government has said, here's the announcement, local authorities, you're going to get legislation put together. I know it doesn't help us. So in all of this, by the way, as we get frustrated, like with anything in life, remember, all of you are lovely people, bit of patience. There's people behind those calls. There's people behind taking those conversations. They're doing the best they can. And I'll have to say, the logistical exercise going from announcements from government to getting everything put together has been incredible. So effectively, you know, again, cut a bit of patience. Hayley's raised a very good point, and I'm just going to tell you what you need to get together as well. So typically, find the document that you've had your last rates bill. Typically, they will want, for example, the reference number, the address of the property as quoted on the letter, not what you think it is, but what it's quoted on the letter. Typically, they will also ask for confirmation of bank details, a bank statement, who are you? Once you've gone through all of that, if you go online to your local authority, thank you, Hayley, for that. If you go online to your local authority, they will tell you what the conditions are. Get them all together. In theory, the process should take about 15, 20 minutes. Reference number, obviously you know who you are. Individual or organisation. The reference number that's quoted on the letter for who you are. Bank statement I would suggest as well. I've seen it on some sites. Pretty much that's it. They might ask for things like VAT number. I've seen, if you're VAT registered, if you're a company, what's your company number? So just get all that together. I would probably go through it, go as far as if you're really keen to get on with it. The local authority should tell you what they need from you. Do it, and fingers crossed money comes in. Now, at the bottom, what I would appreciate from everybody else here, if you've got any thoughts about whether you enjoyed this presentation, obviously I'm not going to lie to you, that would be great if you gave it a thumbs up and said to everybody, thank you very much indeed. Shared it as widely as possible. There is some details at the bottom, so if you're not on our mailing list, our sharing list, I suggest that you do so we can keep you updated with what's going on. We've decided, by the way, that because lots of people have appreciated what's going on, and I thank you very much for your endorsements, is obviously I'm not going to be talking about C19 because you're going to get bored to death of it, because most of it's been cracked. There'll be a few updates here, but there's some other issues that are coming out, things we want to keep in contact with you all. So this Saturday, I'll announce that we're going to do a regular slot for about half an hour. I think you can all stomach me for half an hour of giving you updates about things in your business, things that are going to help you, not just the current situation, but to help your businesses sustain and move them forward. Celine, I'm just going to show you samples here. Perfect, Cardiff. Congratulations to Cardiff. 4 working days after the application. Excellent. That's great news. We have to catch up at some point as well, Celine, but I'm just going to say hello to you live. So yeah, from me, if you could tell everyone, you know, what wonderful broadcast this is. Obviously, it helps us get the message out there, helps us, obviously, more people to know how hopefully good we are. If you like what you've said, thumbs up, comments are always wonderful. If you haven't subscribed to the YouTube channel, I'm not quite going to do Hollywood or Netflix, but that's always going to be useful. Failing that, everybody, have a fantastic evening. Thank you very much for your time this evening. And again, if we haven't had a conversation one-to-one and we need to have that, contact the office on the email address and we'll get that time booked in as quickly as possible. If you've recorded the chase, it's there to watch. I think soaps are back on. So let's have a nice evening. I'm going to go home in a minute and I'll catch all you guys up later on. Appreciate that, Kathy and everybody else. Have a good evening. I'm now going to say good night, one and all. Let's end the broadcast. End the broadcast.